We just experienced an $11 drop for silver in last night's overnight session. $11. Yes, it corrected, but everyone is wondering what happened to silver as the safe haven asset. We have a war going on. Isn't silver the safe haven asset? Aren't we supposed to see a quick jump in the price of this metal? In this live stream, I'm going to break that down. Let's get right into this. Now, a move of more than 5% that unfolded while geopolitical headlines about Iran dominated 80, 90, 100% of headlines. That's what we saw. But in the last 12 hours, futures volume surged. I'm going to get some more silver to show you here while I talk. Futures volume surged approximately 38% above the prior session's average. 38% of a surge. And that's the type of expansion that doesn't normally occur without any forced positioning going on. Silver briefly broke below its 50-day moving average. That was about 1.2% below. And then within 3 hours, yes, it reclaimed it. But it broke below. And that's behavior that only happens when the market is really internally stressed. And liquidity for this asset is becoming tested. In this live stream, I'm going to show you how silver quietly shifted its technical structure while attention was remaining elsewhere. And then I'm going to break down how liquidity mechanics, how algorithmic positioning and intermarket flows are converged beneath the surface. Stick with me all the way to the end of this live stream because I'm going to show you how this reset could define the next 2 to 4 weeks of price action, because that's really where we have to look. Not necessarily in the next day, the next 2 days, 3 days. Really, it's in the next 2 to 4 weeks. Because what we've seen historically for silver is not really that it jumps instantly when we have any kind of geopolitical issue. It's not like gold. It's very, in fact, while I speak of gold, the gold to silver ratio actually expanded by nearly 6% during this peak volatility, by 6%. It compressed back down to 3%, but that was a big expansion. Now, if you're new to this live stream, first hit the subscribe button so you don't miss it. I host this live stream daily on Pound of Gold, and my goal is to break down the issues of silver in the market of that day in plain English so you understand and you get a good sense of the patterns of silver. In a moment, I'm going to get to the charts and show you where the charts are showing for today. My goal is to explain it in plain English so you can understand and get a good sense of where silver might be headed in the coming days, coming weeks. Let's get right into it. Now, this part is important. Really lean into this because silver's move, it really concentrated during low liquidity windows. And that's really important. During the Asian trading session, which really typically represents about 20% of total daily silver's future volume. People don't realize that, 20%. And it could be by as much as 40% compared to New York hours. I mean, that is a big difference. And yesterday, let me zoom in on this. I love these maples with the design that makes it really pop in the light. They're so cool. By the way, these are basically like a little over spot, these maples. I think it's 2019, I want to say. So yesterday, what we saw is an implied volatility. That's really what happened. It was just implied. And it spiked by about 27%. That signaled to traders that they were actively repricing rather than simply reacting emotionally to the idea of a war. And this is key, the sharp downside that we saw when we had that spike, that coincided with a brief strengthening of the US dollar index. That's something that we always have to look closely at as silver stackers, because that reinforced the inverse relationship silver has with the strength of that ever weakening fiat currency that we hold. Now, keep this top of mind. I'm going to put this fancy maple away and get back to my generic rounds. I'm going to get you some more silver on your screen. Keep that in mind because most people are missing the point. Silver, it behaves differently from gold. And it particularly, and this is the history of this metal when we have a time of geopolitical strife or any kind of, get another tube out. These are generic rounds, by the way. Any kind of geopolitical issues that are not going to resolve anytime soon. Nothing's going to resolve quickly. When that happens, gold within the first 24 hours, what we typically see is that gold will move first to this in response to this geopolitical stress. Well, if you're new to this live stream, I host this stream daily at 9 p.m. Eastern. Don't miss it. I'm on Pound of Gold. Hit that subscribe button if you have not, and let me know in the comments where you're listening from and what time you're listening to. You're listening to this live stream. Tell me what time. Now, gold, of course, it's held by central banks, not the way silver. And silver is not held by central banks the way gold is. More than 100 countries hold gold as a reserve. And while silver has that monetary demand and industrial usage, right, accounting for at least 60%, it's different than gold. It's also, the other point we have to look at, and silver stackers hate to look at this point, but we have to look at how oil price changes too. Now, this is going to be brief, but you really have to follow this and understand because it's important for silver. When we have economic and geopolitical issues like we're seeing in Iran, when it flirts with $100 a barrel, we get recession probability models that begin adjusting themselves higher. And that shift pressures industrial sensitivity assets first. Industrial sensitivity assets, not gold, but silver. That's what gets tested first. And while silver's historical volatility has averaged almost 2% that of gold, just looking at the past 20 years, it's almost 2% that of gold. That means it absorbs the macro shock more aggressively. Look, at the time of this video, of this live stream, I told you I was going to show you how silver quietly shifted its technical structure while everyone was focusing their attention elsewhere. Well, here it is. This is really important. I need you to really lean in and follow this if you're trying to understand how this metal is reacting to a geopolitical issue like a war in Iran. Because what we see is the safe haven status, it doesn't guarantee immediate appreciation. It does not. And during the initial phase of uncertainty, money, capital, it flows first toward liquidity, towards U.S. Treasury markets, right? We get U.S. Treasuries they process turnovers measured in trillions. It just dwarfs the silver's market. And when real yields rise, even 5 basis points, that opportunity, that means non-yielding assets like this metal I'm holding in your hand, they get turned away quickly because money goes where it's treated best. And yesterday's early drop, it was less about fear and it was more really about just mechanics. The algorithms are doing this. We are in a new era for this metal. I'm going to show you another maple that I really like. This is a 2 ounce and it's the double leaf. This is so cool. So yeah, we're in a new era with AI trading algorithms moving before humans, well before humans, just really making the first move first. Now, lean into this because this is critical. The moment silver reclaimed its 50-day moving average, momentum oscillators, they reset from oversold to nearly to the low 40s. That's the relative strength index. It's another, we're going to get to the charts in a minute. I'm going to show these charts that we're seeing. But that's another index that we always need to look at. And it sent it back toward neutral territory for that 50-day. Now, that reversal, I'm going to explain this in plain English. If you're new to this live stream, I host this live stream on Pound of Gold daily, 9 p.m. Eastern. Don't miss it. Leave me a comment below. Let me know what time you're listening and where you're listening to, where you're from. Let me know that. So that reversal that occurred, it was within roughly 180 minutes. And that indicates that liquidity clearing was just that. It was being cleared rather than any kind of structural breakdown. It's just liquidity moving. It's just money being shifted. It's not loss of faith in silver, in this metal in any way. It's simply liquidity moving hands, shifting hands. Now, futures volume during the rebound, listen to this number, it was approximately 15% lighter than during the decline. And what that tells us, when we see that, that suggests that there's forced selling. And the forced selling stopped because it kind of exhausted itself. Again, my goal is to explain this in plain English. We're going to get into the charts in a minute, and I'm going to show you the real technical breakdown. But my goal of this live stream is to explain all these movements in the silver market in plain English, so everybody can get a handle on the patterns that we look at in silver, and really try to glean from that where the price of silver may be headed in the short term. That's really my goal. So with that in mind, pay a close attention to this. Really listen to what I'm about to say. This is going to help. Commercial hedgers have reduced their short exposure by nearly 4%. 4%. And when we have price declines, and when it drops sharply like that, but at the same time, participation, commercial participation, industrial participation does not expand along with it, we get a downside trend because it's the psychological part of this metal. Traders, just like stackers, they start to convince themselves that things are going down, and they start acting really accordingly. Because at the same time, options open interest in near dated contracts that we're looking at, that expanded by 10%. 10%. And that shows that we have hedging activity rather than any panic liquidation. And when I say panic liquidation, I mean big movers feeling like we're all out. We're just liquidating. We're all out. A panic liquidation. We are not seeing that. Now, don't miss this point that I mentioned at the top of this live stream regarding the gold to silver ratio, because it is really so important. Even if you don't follow macro issues, you don't follow the geopolitical issues that are going on, if you're just a silver stacker looking to figure out how to get more metal, the gold to silver ratio for you is really key. So lean into this. Don't miss this. Recently, the gold, well, let me just say, historically, the gold to silver ratio is hovering around 70 to 1. That means 70, I almost showed you 70 ounces in this live stream, 70 ounces of silver. 70 ounces of silver could be swapped out for 1 ounce of gold. Last summer, it stretched out to, what was it, 112 ounces of silver for 1 ounce of gold. And at that point, people were taking 1 ounce of gold and they were getting themselves 112 ounces of silver. Really smart. More recently, I think it was, I want to say 2 months ago, it tightened so much. I think we got to like 48, 49 ounces of silver to 1 ounce of gold. So exciting. I'll tell you my ratio, and you tell me in the comments what's your ratio swap point. I just made up that phrase. What's your swap point? Mine is in the 30s. The moment, so, and it's happened twice in my lifetime already, that I think it was 2011 was the last we could get. It was about 35 to 1. 35 ounces of silver to 1 ounce of gold. Just what I've showed you on your screen in this live stream could get me 2 ounces of gold. That's exciting. It's going to get there again. It will. We have to be patient. So now back to what we saw in the past, in the overnight session and this big drop regarding the gold to silver ratio. What happens is the gold to silver ratio's expansion in this way, really beyond the multi-week range, was about 5%, but expanded, as I mentioned, to 7%. What that tells us is when we look at the mean reversion over the coming 10 days, historically, and this is where the patterns of silver really help us. Historically, when that ratio compresses by even 3%, by even 4% after a spike, silver often enters, and listen to this because you're going to like this, it enters a catch-up phase. Yesterday's compression into that close ratio, that suggests that it could be the first stage of stabilization, and that could mean that this compression could be on the way. Now, that's, again, this isn't telling us exactly silver's going at that moment, but in that direction, but it shows us that historically this is what we see. So here's where things get important, because silver remains approximately 11% above its quarterly low. 11%. Now, really focus on that 11% because this is going to be helpful. We're approximately 11% above the quarterly low. And to understand that, you have to look at the 200-day moving average. The last few live streams I've had, we talked a lot about the 50-day moving average. Well, same idea with the 200-day moving average. You're simply looking at the volatility of this metal over a 200-day window rather than the 50-day window. And that 11% is above its quarterly low and nearly 8% above the 200-day. That tells us that it's continuing to slope downward. You'll notice that most of these rounds I show you are buffalo. I just love the buffalo. I mean, a lot of these are sunshine mint. These are just generic rounds I'm showing you. This, although it looks like a maple, it's a round. Don't get too excited. It's just a cheap generic round. So over the last 6 weeks, really, a price has formed a pattern of higher lows despite all these volatility spikes. And that's great. You want higher lows. That you want higher lows. You always want that. If you're new to this live stream, first hit that subscribe button. I host this live stream daily on Pound of Gold at 9 p.m. every night. Tell me in the comments what time you're listening to, where you're listening from. Give me an idea of where you guys are at. Now, the structural support levels that we've seen have not been elevated on a closing basis, even after the nearly 5% swing, that intraday swing that we saw. But inflation gives us expectations that moved only about 3 basis points during that escalation. And to just look at inflation in terms of something that the Fed talks about and then silver moves or gold moves doesn't really help you. But when you look at these exact points, when you look at the basis points that we talk about in terms of inflation expectations, and when those move during the volatility of silver in a moment like we experienced at this overnight session, that's really helpful because listen to this. If break-even rates were to increase by even half a percentage point, well, again, historically, when you look at the history of silver, this is what it tells us. Historically, silver will outperform gold over the coming 4 to 8 week window. So this is like the long-term understanding of silver that really helps us when we look at these numbers and we see silver drop, and like we did in the overnight session, everybody wakes up thinking, what? How did silver drop $10? What did I miss? How is this possible? I thought it was a safe haven. Okay, let's head over to the charts. $13 was the full trading range in silver over a 6-hour period today. $13. It stretched from $91 to $78. And that kind of spread in a single session is not normal behavior for a market that claims to be stable. In roughly 360 minutes, the price covered a distance that typically takes 3 to 4 trading days in calmer conditions. And that type of expansion tells us that something important just shifted. So as everyone is shouting, silver is dead, we have a war going on, safe haven momentum should be pushing this price up. Well, actually, something is making silver respond. And that's what I'm going to break down for you here in this section of the live stream. If you're new to this live stream, I host this daily on Pound of Gold, 9 p.m. Eastern every day. 9 p.m. Eastern. Don't miss it. Hit that subscribe button and leave me a comment. Let me know where you are, where you're listening from, and what time it is when you're listening. First, I'm going to show you how this 6-hour period created a textbook intraday breakdown and a rejection structure. I'm going to explain this in plain English so you get it and you could use this information in the future to get a good sense of where silver is headed. And next, I'm going to break down how key moving averages are defining silver's next move. And stay with me all the way to the end because I'm going to explain to you how to frame the next move using nothing but the price charts that we look at. The midpoint of today's range sits near $84.80. And almost nobody's noticing how very critical that number is. Lean into this part. This is important because the first thing you analyze after a $13+ range expansion is not where silver should go. We all want to think that. Of course, we want to know where silver headed. But we should be looking at where traders were forced to act. When price slices from $90 down to the upper 70s, stop loss orders cluster below recent support. and those get triggered. It's a cascading effect that happens, and it's often visible in large, extended candles. The low at $78 now actually becomes a reference point, not because it guarantees support there, but because it marks where buyers finally push back. Now, keep this at the top of your mind, because most people are missing this point. A violent range day, typically it creates three primary levels that we're looking at. We're looking at high, we're looking at low, and we're looking at the midpoint. We have those numbers clearly. 91 as the high, 78 as the low, 84 at the midpoint. Now, if silver begins accepting prices above the midpoint, the odds increase that the breakdown was a overcorrection. If it repeatedly rejects that midpoint, sellers remain in control, and that single line near $84 will likely dictate short-term bias. So in plain English, what we're saying is if you find the midpoint in such a violent range that we saw today, in the short term, in the coming days, that gives you an idea of where silver might be holding. And it could be holding across those days. Now, at the top of this video, I told you I was going to show you how to use these charts to really get a sense of where the price of silver is headed. Well, here it is. Let's pause for a moment because everybody gets this part confused. And let's really look at this. Moving averages are not predictive. They're not. They are reactive. On a session like we experienced, the 6-hour window, the 50-day moving average often becomes irrelevant intraday because price moved nearly 15% from top to bottom. Instead, shorter-term averages like the 20-day period on a 15-minute chart, that begins to act as the real resistance, the dynamic resistance that we look for. So when price rallies from $78 to above 83 and then it stalls, you're watching the market test whether buyers have conviction to push that higher. Now, really focus in on this part. This is critical. The quality of the rebound matters, really more than the size. A bounce of $5 sounds impressive. It sounds impressive, of course. Think back where we were when we were hovering just so stagnant 2 years ago at $22 an ounce. A $5 bounce we would have had parades in the street because silver at that time was stagnant. Oh, if you're new to this live stream, hit that subscribe button. Don't miss it. I host this live stream daily on Pound of Gold at 9 p.m. Eastern every day. Daily. My goal is to break down the moves in the day's market in plain English so everybody can understand what's happening and try to use this information to get a sense of where silver price is headed. That's my goal. Leave me a comment. Let me know where you're listening and what time it is when you're listening to it. So, sure, a $5 bounce sounds impressive, yes. But if it fails below $85, then that bounce actually becomes a trap. If price holds above 84 for multiple 15-minute closes, and that actually suggests that we have accumulation going on. And really, if it repeatedly wicks above that level and closes below it, that suggests that we have distribution. And you're not predicting headlines here. You're reading acceptance. That's what you're doing. You're looking at these prices and you're reading how accepted they are. Now, pay very close attention to what I'm about to say here. Most people are busy staring in the wrong areas and they miss this. So the prior close was at $88 and it's now an overhead resistance. Markets remember prior settlement points. They remember where it stopped, where we closed. If silver cannot reclaim that $88, rallies into the high 80s may invite sellers. And you could call it profit taking, whatever you want to call it. But that's what we could see. And that creates a defined battlefield really between roughly $84 and $88. A break above that upper boundary, it shifts the structure because repeated rejection below it maintains downward pressure. Now, the psychological ceiling and floor of these levels is so important. Please do not miss this point. It is so important. If the psychological levels are at 80, 85, 90, now those carry added weight because, number one, rounded numbers, for some reason, it's just human. Something about our humanity, we respond to rounded numbers. And those rounded numbers, they act as a magnet for order flow. Notice how low we formed just below $80 and then price rebounded quickly. This suggests buyers were waiting near that zone. And if silver revisits $80 and then holds again, that becomes a double bottom scenario. If it slices clean below 78, then the breakdown will resume, and it's likely, because we're looking at these psychological levels, it's likely to continue. So this is where it gets really important. With a 6-hour window like we're analyzing today, that volatility, this intraday volatility over a 6-hour window, really it likely expanded by more than 30% compared to recent sessions. When volatility spikes like that, the market typically, it oscillates before choosing any direction. That's why we hear this phrase whipsaw. And that means choppy price action between $83 and $86 would not be surprising. The next decisive move, though, will likely occur once one side proves control over at least a $3 to a $4 stretch without any immediate reversal. When we see strength, that's what we're looking for. And that's giving us really a strong hint as to where this price of silver could be headed. I hope you're gaining some benefit from this. If you're new to this live stream, please hit subscribe. Don't miss it. Every day I host this live stream on Pound of Gold, 9 p.m. Pound of Gold, 9 p.m. Don't miss it. Every day I'm breaking down the movements of the silver market, and my goal is to explain this in plain English so everybody can understand it, and you could use this information to get a sense as to where the price of silver may be headed. That's my goal. Now, stay locked in here because this part really matters. If we're looking at this 6-hour window today where we had all this volatility, about $13 spread of volatility. If price consolidates above $84 for more than 2 or 3 hours, then the probability of a push toward $88 increases. But if instead price drifts back toward 82 and then it struggles to bounce, sellers are regaining their leverage. That's really important and it really matters. Watch how long it takes for each dip to recover, because if dips begin recovering in under 30 minutes, that's constructive. If recoveries take more than 90 minutes, then you've got momentum that's actually fading. Now, zero in on this detail. Today's session carved out a measurable risk, and it was a box that's roughly 78 to 92. That's a $14 spread. That is a battlefield. That is the active battlefield. Because when we have volatility like that, we really have to look close to see where we're going to land to give us an idea of where this price of silver may be headed in the coming days. Really, technical traders, they will likely anchor stops just outside that box, between $78 and $92. Breakouts beyond either boundary, especially with follow-through of more than $2, that could trigger expansion. And this is really key. The most important takeaway from this 6-hour window that we're looking at, it's not the headline move. It's not, oh, silver was so volatile, it fluctuated between $14. It's really the structure it created. That's what I'm trying to show you. When you're looking at the lows, the mediums, and the high, it's that structure that's being created now. And silver is defining a clear midpoint at $84, a clear resistance at 88, and that lower support at 78. Until one of these levels decisively fails, price, it's going to rotate between them. That's what we're going to see. And often people look at all this fluctuation, all this volatility, and they feel like there's some kind of hidden movement going on. But really, we're not seeing hidden movement. We're seeing a pattern of silver. And when you look, if you take away anything from today's live stream, it's that if we're looking at the low and the medium and then high between this type of volatility at $13, $14 range in such a short period of time, we're going to land on one of those points, and that's going to give us a real sense as to where the price of silver is headed. Thanks for joining this live stream. Every day I'm hosting this live stream, 9 p.m. Don't miss it. If you're new, hit that subscribe button. It helps get this information out there. My goal is to explain what's happening in the silver market every day in plain English so everybody can understand and get your own silver. Money Metals Exchange is a sponsor of this channel. They're a great company. They hold this contest. They give away 20 American Silver Eagles. Every month they hold this contest, every month. This month's winner was John S. from Farmers Branch, Texas. Last month's winner, nobody claimed the prize. So if you're part of this contest, please answer your emails. Open your emails from Money Metals Exchange. We were sending out winning emails and nobody claimed the prize. Can you believe that? 20 Silver Eagles just sitting there. Nobody's claiming it. You got to open your emails from Money Metals Exchange. If you're going to be part of this contest, I mean, we do it every month. It's been going on a full year now. Every month giving away 20 American Silver Eagles. All right, I'll see you guys on the next one.